Hello traders, we'd like to address a question from a trader on what risk on and risk off refer to or imply in Forex trading. At the same time, we will also enlighten you on how traders position themselves in the market depending with whether the market is on a risk on or a risk off mood or risk on or risk off market sentiment. Risk on and risk off are two terminologies that investors and traders often interact with while engaging in Forex trading. As such, as you continue in Forex trading, often at times that you will hear or you will see analysts say that the market is on a risk off or risk on sentiment. Typically, risk appetite refers to the prevailing mood in the market. When the market is on a risk on, market participants are usually happy and highly optimistic. The market is usually in an upward trajectory with numerous economic data indicating economic growth. One thing that you'll notice is that during such instances the market is extremely bullish, and traders and investors are usually confident when they are taking their long positions. When the market is on a risk on sentiment, currencies that are more sensitive to economic growth and high yields usually perform well, or rather, traders usually reap heavily. In essence, the currencies usually trend upwardly together as they follow the direction that the market is trending on, or rather, as they follow the market on its upward trajectory. Some of these currencies are all include Euro, Canadian dollar, Sterling pound and New Zealand dollar, among others. During risk-on sentiment, investors and traders are usually divesting their money from safe haven currencies like gold, United States dollar, and Japanese yen into riskier assets as they seek higher yields and returns. In short, what we are saying is that they usually remove their money from safe haven currencies and invest that money in risk currencies such as Euro, Sterling pound, and New Zealand dollar. In a risk-off mood, market participants are usually nervous. The market is encompassed by worry and nervousness with stocks performing poorly or declining in price. Risk-off sentiment envelops the market as a result of weak economic data releases from numerous sectors which point to weakening economy. Typically, in a risk-off mood or in risk-off sentiment, money is usually flowing out from the risk assets such as Euro, Australian dollar, Sterling pound, and Canadian dollar, among others, back with the safety of bonds, gold, United States dollar, and Japanese yen. As a result, the safe haven currencies usually perform better when the market is selling off during the risk-off sentiment. So professional traders usually take this advantage of such knowledge by positioning themselves according to the prevailing market mood or sentiment. In short, what we are saying is that when you as a trader acquire this knowledge, you should also be trading professionally by taking positions according to the prevailing market mood, so that when the market sentiment is on a risk on sentiment, then you'll be taking long positions on currencies like Euro, Sterling pound, Australian dollar, and Canadian dollar, among others, as we have seen. As a Forex trader, it is critical to take long positions on currencies that thrive during risk on sentiment, while going short at the same time on safe haven currencies. What this means is or what we've just said is that if the market is on a risk on sentiment, you should be taking long positions on risky currencies. And if you are taking a short position, then you have to take a short position on safe haven currencies. On the other hand, during risk of sentiment, Forex traders should take long positions on safe haven currencies while taking short position on risk currencies. Thank you for watching. Again, let us meet again on our next video.